Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS008 traders. The title of this video is how to combine Fibonacci time zones with the wave principle. All right. I would like to refer traders to our Day Pro Traders YouTube channel, all right, when they can watch a video that I call, Fibonacci time zone trading tips and tricks. In that video, I'll explain to traders, how one can use a Fibonacci time zone. So we highly recommend that video, Fibonacci time zone tips and tricks video at Day Pro Traders YouTube channel. All right. How can we combine Fibonacci time zone and the wave principle? All right. So the first thing that we need to do is to count the Elliott wave. For more information about how to count wave like a professional trader, one should go to www.24elliottwaves.com or the 24 Elliott Waves YouTube channel. All right. So here I am looking at a Nike stock, Epic November Kilo Eco, NKE, listed on the Dow 30, all right, American stock. We are on a monthly chart, and I've counted, 5 Elliott waves. So I'm not going to dwell on the wave count or explain to you how I count my wave. Feel free to disagree with my wave count, But when we are counting wave, the most important thing is the trend. Are you, even if you are wrong in your wave count, are you counting the wave against the trend, all right? So if you are about to buy, you should be in an uptrend. If you are about to sell, the price should be in a declining channel, all right? Very important. All right, so I've counted 5 waves, and the first wave is from here. Follow me from here all the way up here. The blue line here represents the first wave. We have a kind of a complex second wave. Price went down, price went down, price went down again. 1, 2, 3. It's a complex second wave. So, but I draw my line like this, so I'll use this red line here because that's the lowest point of this move. 1, 2, 3. That's the lowest point right here. That's why I represent the red line as the second wave. But in fact, the second wave is 1, 2, 3. All right. So we have the third Elliott wave that has started here. So in fact, I can put the third Elliott wave has started here. All right. Some traders may say from here. It's up to you. All right. And the third wave, it went up here. And then we have the fourth Elliott wave. That has ended here. This is the fourth wave. In this session here, we have an extended fifth wave. Why do we have an extended fifth wave? It is possible for traders to know whether a financial instrument will have an extended fifth wave, provided that the fundamentals are solid. If the fundamentals are not solid, if the market sentiment is not bullish, if the market environment is not viable, you will not have an extended fifth wave. We usually have an extended fifth wave. As you can see here, this is a complex fifth wave because, all right, the third wave is not, strong, all right? It's not strong. See, just when, see this from the high to this high here, it's no big difference, So it's not very strong. It didn't go up very much, You see the high of the third wave and the high of, the first wave. So the third wave is not very strong. And this is the reason why also, if the third wave is not also strong, you will see that the fourth wave, will be quite deep, all right? Normally, the fourth wave is a shallow wave, all right? So here you can see it went down a bit too much, all right? This is in 2008 to 2009. We see here it went down big time. This is the financial crisis. It went down big time. So, according to, my apologies to trader, because I'm coughing, I have a bit of flu here. My apologies to traders. So, all right. So, because the third wave was not extended, you can see that the fourth wave was quite deep. Usually, if the third wave is quite strong, we will have a very shallow, okay, fourth wave, usually retracing the third wave up to the 38.2% Fibonacci retracement level. This is the theory, and this is what we see very often, okay? So, but because neither the first wave nor the third wave were extended, we will expect the fifth wave to be extended. This is what has happened here. But as I explained to you, we must check Google Finance, Yahoo Finance, all right? Do our due diligence. If the fundamentals are solid, if the market sentiment is bullish, the market environment also, okay, viable, we are likely to see an extended fifth wave. See, here we have an extended fifth wave, which has been divided into 5 Mano wave. First Mano wave, second Mano wave, third Mano wave, fourth Mano wave, and the fifth Mano wave of, the fifth wave itself. In my view, we are now at the end of the motive wave, which is formed of the first wave, second wave, third wave, fourth wave, and the fifth wave. We are, in my view, the level that traders are watching now is the level of 100. Until we go above that level of $100, okay, we can say that we are on the edge of the end of the fifth wave. That remains to be seen, all right? Unless there are other news that can propel this beyond 100, but the 100 level is a challenge. The prime may go above it, but we need to be careful in case we have a kind of a flat correction here. All right, flat correction, you know, all right, expanding flat correction, running flat correction, all right. So be aware of that, okay? It can be sometimes messy here. When the price will go up and display a new high, so they will think that, okay, George, it's all nonsense, it's all mambo jumbo, but it's just a flat correction taking place, all right? So we have counted the 5 waves, first wave, second wave, third wave, fourth wave, and the fifth wave, which is extended like this. So in fact, the fifth wave is from here all the way up here, but has been extended because it has been divided into 5 Mano wave, all right? So this is the fifth wave, all right? So how do we combine Elliott wave and the fifth wave? So at the beginning, okay, as we see the first wave and the second wave is completed, you see it's completed here, we can pull out our Fibonacci time zone, okay, to forecast the possible reversal zone. So once the first wave and the second wave is completed, all right, we can pull out now, okay, our, okay, Fibonacci time zone tools, okay, to forecast or to determine or to identify, okay, possible reversal zone. So what I will do, what myself I usually do, I'm telling you now about my strategy. I'm going to move this like away a little bit, okay, this is, okay. I'll put, okay, the first Fibonacci time zone, which represents by 0, here you see 0, 1, 1, 2, all right, 5, okay, 8, 13, and so on. That's why I recommend to traders to go to the Pro Trader YouTube channel and to watch the video that are called Fibonacci time zones, tips and tricks. I will not repeat myself here, all right, because I share the tips about Fibonacci time zone. Here, I'm applying the Fibonacci time zone, okay, with the wave principle to determine, okay, possible reversal zone. So once I see the first wave and the second wave completed, now what I'm looking for, I can select a significant low, combine a significant low and another significant low, or I can combine a significant high, okay, and a significant low, all right, at the end of the first wave and the second wave, okay. So here, let's start first with selecting the low, okay, significant low of the first wave and a significant high of the first wave. So these are the first one I choose now. This is to determine possible reversal zone. So if I start like this, choosing the significant lows of the first wave and a significant, my apology to traders, oh, my voice. They told me that I need to get some ginger. I'm drinking lemon sip here. Try all sort of thing, okay? It's because we use heater winter time, so the oxygen is lacking a bit, okay? Too much heating. Okay, now, all right. Apology to traders. Now, so if we use the significant low of the first wave and the significant high of the first wave at the beginning of to set up our Fibonacci time zone, we can see that at this point in time, if once the second wave, okay, is underway like this, you see, so the first wave has been completed, the second wave is underway like this. I can use this strategy by putting the first Fibonacci zone here and the second one right here, and according to this strategy, it's telling me that there is a possible reversal zone here. Can you imagine? This is beautiful. This is exact. So you see how the price went down? 1, 2, 3, and reverse here. Because the price was going down before reaching the reverse point, we will be bullish, expecting the third Elliott wave to start here. This is excellent. Focus, excellent tool here. All right? And from there, we will say the third wave is underway, and we will expect it to go above, okay, above the high of the first wave. So if you enter here, you will allow it to go up, okay, so you may decide to take some profit here if you want to, because there's a resistance here, and allow it to come above it, expect it to continue up because you want to catch the third Elliott wave. If the fundamentals are solid, all right, if the fundamentals were not solid here, they probably come back down. So we'll have a cancellation of the first wave, all right? Remember, the fundamental, okay, the fundamentals are the fuel that propel the price. Fundamental, market sentiment, market environment. Very important. Do not use the Elliott wave in the void. Combine the Elliott wave principle, the wave patterns, then go to Google Finance, Yahoo Finance, or if you're trading Forex Factory, okay, do your due diligence first and then apply the Elliott wave so your technical strategies are backed by, okay, fundamentals, reasons, all right? Very important. All right? So this is excellent forecast using the Fibonacci time zone to detect a possible reversal zone while we are counting wave or using the wave principle. Excellent. And then here we have again another possible reversal zone, all right, but it's not very good because here you see the price start going up. It didn't go much above the high of the first wave, which is compulsory for a third Elliott wave. Strong if the fundamental were solid. You can see that we will doubt this one here. We will doubt it because we'll expect the price to go up more because if the fundamental are solid, the third wave should be a bit longer. Should be longer, okay? All right? Because according to the wave principle, the third Elliott wave should not be the shortest wave. So this is a warning. So when we are using the Fibonacci time zone, it's giving us warning, but it's not an exact science. We can work with that because we are working with probability, okay? So we know where are the, okay, possible reversal zone, but does not mean that definitely we will have a reversal there. But if a reversal is taking place there, what do we need to do, ladies and gentlemen? We will place a trade, all right, at a low risk entry point. Yes or no? All right? Beautiful. Then again, now we have so using the same strategy, the low of the first wave and the high of the first wave, is telling me that there is a possible reversal zone. This is excellent. So now I have counted 1, 2, 3, but at the beginning, just with the first wave alone, once the second wave is underway, I can do this. So the second wave should be underway first before I can do this, okay? All right? So now we are at a possible reversal zone. All right, you can leave this on your chart, on the monthly chart. I leave a lot of lines on my chart. Traders that are following, I noticed that on my YouTube video, I leave lines on my chart because I want to go back to them. Okay, and the horizontal line of the chart is the time. So when we are using Fibonacci time zone, we are applying the Fibonacci ratio or the Fibonacci numbers. Okay, 0, 1, 1, 2, 5, 8, 13, 21, okay, 34, 55, 89, okay, to the time. All right, that's why I refer you back to the YouTube channel. All right, guys. Okay. It makes sense? It is also powerful. So he's telling me now it's a possible reversal zone here. I will not discount it. I will acknowledge the warning, but I will not just go and force it and sell it, but I will use a top-down trading method, okay, to enter the trade. For TSC, WSY, UOA traders, if you go to our signal time frame, you will see the signal here, we will take it by all means. But again, we will not use the technical alone. One should go and check the economy news relating to Nike, okay, the market environment, and the rest. So talking about the trading triangle, the trading drill, okay, fundamental plus technical, wave principle plus fundamentals, okay? Because why we need to check fundamentals, it's too important, especially if you want to sell. If you want to sell, the natural progression of the market is to go up. So if you want to sell, you need to have a valid reason why you should go and sell a financial instrument, a valid reason, okay? All right? At least market sentiment should be bearish, or we are in a bearish season like we see in 2008, but have a good reason why you are selling it, all right? Otherwise, especially if you want to swing to sell and forget, all right? Okay? Especially American stock are very bullish. For the American stock going down, it's like something that should not happen. But, okay, stock should go up and go down and go up and go down. It's about the market cycle. Doesn't worry me at all, okay? But you worries, okay, the directors of companies, okay, which is understandable, okay? Okay, this is one way to use a Fibonacci time zone and, okay, the wave principle. I want to show you again another example here. What I'm going to do to save time, I'm going to pause the video. I'll place my drawing in this one. I have to show you that. Okay, so we pull out again our Fibonacci time zone tool. And this time, okay, bear with me. Okay, this time we'll select the low of the first wave, and we will select the lowest point. This is the lowest point of the second wave. You can put it here or put it here. When you are using the Fibonacci time zone, try to go into the mind of other traders. So here I decided to use this low and this low. Another trader may decide to use this low and this low. So when we are doing that, we want to see what are they looking at, what are they thinking. So to go into their mind, okay? But I prefer to use, okay, this low here because I want to see this line here on my monthly chart. If I put it here, okay, if I move it here, okay, I can see my last line here. So that's why I'll prefer to use it like this. But the key point is to use, okay, the low of the first wave and the low of the second wave. You get it now? All right. I think I'm going to go over my 20 minutes. So I'm trying to bring it below 20 minutes, but I don't think it's going to happen today. All right. It makes sense? It is also powerful. So we put it at the low of the first wave and at the low of the second wave. The first thing that we did was the low of the first wave and the high of the first wave. Remember that. So that's the first one you're going to use. Because the first wave is completed, the second is underway. You don't know whether it's going to be a complex second wave, how the second wave will develop. So you can use at least the low of the first wave and the high of the first wave to determine, okay, the possible, okay, Fibonacci reversal zone, Fibonacci time zone, okay? Now I'm using the low of the first wave and the low of the second wave. Now let's check what's happened. So he's telling me now possible reversal zone here. See, price was going down, yes or no? Before reaching the possible reversal zone. This is not bad. This is not bad. This is not bad at all. Okay, because we are expecting, because we know that the second wave is underway, and we are expecting the third wave to go above the high of the first wave. All right. If this point here as a possible reversal zone, it's a nice place to buy again. So it's like you buying at different places into the third area wave, provided that the fundamentals are solid. All right, market sentiment bullish, okay, very important. Don't buy and hold in a bearish season as people did in 2008 and 2009. You don't have to, all right? You don't have to, all right? You don't have to buy in a bearish season, all right? You can see the best signal to buy, ignore them. Ignore them. Let somebody else take it. All right? But some traders, they are more bullish. They like to buy all the time. But sometimes, you just put your money in your bank. It's the best thing to do. All right? If you are so desperate to buy, like in 2008, 2009, as a lot of market participants were complaining, blaming everybody else, all right? All right? So people lost money, okay? People lost money, but because it's like you are sowing in a wrong season, all right? You are sowing in a wrong season. So with the Fibonacci tool, we can time the market. This is the advantage of the Fibonacci time tool, allow us to time the market or to make decisions more accurately. But we will not use the technical alone. If you are using the Fibonacci time zone alone, just like here it's telling us to sell, look, the price continue to go up. But in that zone, that's why we don't call it Fibonacci times point, because it's a zone. This signal here is not too bad. It's a zone. So price continue to go up, and finally, they crossing this line. See some trader try to sell here. All right? It's not bad decision, but continue to go up a bit, but finally it come back down, okay? This zone, it's a zone. Use a top-down trading method, okay? If the signal fell, come out and wait again patiently, all right? Wait again patiently. Another signal, and then you enter again, all right? Gently, gently. Flow with the market. Flow with the market, okay? So it's telling me possible reversal zone. Yes, it was, because we see a reversal in this zone. All right, not bad, isn't it? Not bad. Not bad. But if you do not understand, okay, the wave principle, you will think that this is the end of the fifth wave. But once, if the fundamental are truly strong, because the extension of the fifth wave is that sometimes data are lagging. Market are a bit so cautious during the normal third area wave. They didn't push it too fast. And finally, data coming out, or maybe excellent earning data were released suddenly out of the blue, contrary to the market sentiment. Boom, people come in last minute now, buying. And analysts upgrading the stock. And people thought first that, okay, we don't know whether this thing is going to be up, okay, the way things are going. They have a bit of doubt, they have a bit of uncertainty, and the third wave was not very strong, okay? This thing happened. And finally, other data came out, and everybody's smiling. The market sentiment has changed, okay? Strong balance sheet, cash flow, okay? And more market share, excellent management in place. And now everybody say, well, this thing is a buy. And now people say, okay, we will expect the fifth wave to be extended. Okay, right here. So using the low of the first wave and the high of the first wave, we were able to determine the end of the fifth wave. That was the first example that I give to you. All right. Now we are using the low of the first wave and the low of the second wave. All right. Here we have a possible reversal zone. Again, a possible reversal zone. And okay, there's another line somewhere on the far right side, far right hand side, which you cannot see on my chart here. I'm on the monthly chart. Let's go to the yearly chart. Hopefully we'll see. This is the line that we can't see on the on our chart. Okay, this one here. Okay, on the monthly chart. Okay, this is how one can combine Fibonacci, okay, time zone and the wave principle. Let's go back again. We are back. Apology to traders, coffee no stop. Okay, it makes sense. Okay, it is also powerful. All right. Apart from this, I also explain to traders that one can use the middle line of the two Fibonacci time zones. You see these two lines. You can also draw the middle vertical line, to determine possible reversals. So sometimes you may see that the price will reverse in around the middle line of two Fibonacci time zone, right? So I'm telling you that now, okay? So as the market is progressing like this, okay, like here, you can see that the fifth wave is underway, okay? We are expecting it to be extended. How can we use again the Fibonacci time zone, all right? Now, this is a method that I show traders, day pro traders, using the Fibonacci time zone as a momentum indicator. We want to concentrate on what is happening now in this moment in time as I'm blinking, or as I keep my eyes wide open without blinking. I want to know what is happening now so I can know where I can put my feet, right? All right? Zoom into it. So for that, I can apply the same strategy that I apply at the beginning of the multi-wave, first wave, second wave. I can apply the same strategy here for the extension of the fifth wave, because I'm expecting the fifth wave to be extended. Once I see the first wave of the fifth wave, the first, okay, minor wave of the fifth wave underway, here we can be tricked here, you see here, because the price did pull back a bit here. So we will, as you see, start going out, you say, all right, okay, probably, without going, okay, all right. So we will say, okay, probably this is the end of the first minor wave. So we will be tricked like this. This is not bad because, look, it's telling a possible reversal zone here. It did change direction, yes or no? It did? Yes, it did. So as the fifth wave is underway, we are expecting it to be a complex fifth wave. We can apply the same strategy that I show you here to the complex fifth wave. So the low of the first minor wave of the fifth wave and the high of the first minor wave of the fifth wave right here. Okay, so at this point in time, as the price is going down like this, we on a monthly chart, we will think that, okay, this is the second minor wave of the fifth wave, and we'll be thinking that it's the third minor wave, and we will say possible reversal zone of at the end of the fourth minor wave or the fifth wave. But as the price is progressing, that's why I said to you, the wave count is dynamic. So you count your wave, don't think that the price have to obey you, all right? Can be messy sometimes. So the wave count is dynamic. You need to adjust to the market instead of being rigid or being stubborn or fighting the market. Don't point, okay? No point to fight the market, okay? There is no wave count if the wave count align with the market pattern, okay? This is what I say to traders all the time. Draw your channels and you'll be all right, okay? You'll be all right with your wave count. You'll be all right. If you come out of the channel, you know that, okay, that momentum is kaput, another momentum is underway, okay? So at this point in time, we'll think, okay, here like this. But finally, we see that, okay, in fact, the first minor wave went all the way up here. Feel free to disagree with my wave count, okay? So using the low of the first wave, the first minor wave, and the high of the minor wave, okay, it's telling us that this is a possible reversal zone, not point, again, zone, you see? That's where we are again. So with the first one that we use here, we see that this zone is a possible reversal zone. So we need to be careful. That's why I say to trader, priority to bearish signal below the level of $100 until we go above the 100. If it goes above the 100 and find a support, okay, gently. If you are bullish, don't be too excited. Gently. Pay attention to the S&P 500 itself. Because we are trading the Dow Jones, you pay attention to the Dow 30 itself also. This is about the trading triangle. The market first, the sector, before the individual financial instrument. The heart of the trading triangle is we have the fundamental, the economy news, and the market leaders. What are the market leaders for the Dow 30? Go to www.dayprotrader.com, click on Market Watch, and know about the market leaders of the Dow 30, which can change the dynamics of the Dow Jones Index. All right. So though we are trading Nike is listed on Dow 30, and market leaders in the Dow 30 can mess up the Nike stock. All right. So this is about the market sentiment, the trading triangle, and this is how the professionals are trading. All right. This is how they are trading. Technical, fundamental, trading drill, trading triangle. This is why we are showing traders every day. All right. So here we are using a low and a high of the first minor wave or the fifth wave is telling a possible reversal zone. All right. So as you can see, I'm trying to go into the mind of other traders. You know, don't be rigid. Play it both ways. Don't use only one method. Try to play with it and just highlight those zones and be aware of them. Okay. All right. You want to be flexible, okay? Don't be rigid, okay? Go into the, you are not alone in the market. Pay attention to other market participants. Don't think that with their strategy is useless or mumbo jumbo, all right? As some of the fundamental traders call technical traders. And technical traders think that they don't need fundamental trading, but stay in the middle, okay? Be in both camp, okay? 1 second, please. Just to breathe in and breathe out. So again now, I'm going to pull out again my Fibonacci time zone. We are talking about how we can combine the wave principle and the Fibonacci time zone to determine, okay, possible reversal zone when we are trading stock, commodity, futures, options, all right, forex, all right. So I'll use the low of the first wave and also the high of the first wave. Okay, remember what we did second time? We choose the low of the first wave and the low of the second wave. So here we are applying the method to the manual wave of the fifth wave that is extended. Remember the fifth wave is from here all the way here, and we have manual wave, first manual wave, second manual wave, third manual wave, fourth manual wave, and the fifth manual wave. So the strategy that we apply at the beginning of the whole motive wave, we are applying the same strategy here for a complex wave, which is the fifth area wave that is extended. If the first wave also is extended, we can apply the same strategy. We know that the first wave, the third wave, and the fifth wave can be extended. All right? So you leave those lines on your chart. You can even use the Fibonacci time zone to determine, okay, where the correction will end. So have them on your chart. If you can see on one time frame like I did it now, you can switch time frame, go to the higher time frame, and you can see them, okay? Like now, some of the line, I can't see them here. You go to the yearly chart, here they are, okay? They are here. There are, you see, because it's the Fibonacci numbers, 0, 1, 1, 2, 3, and then we have 5 somewhere up here, then 8, and then 13, all right? I can go on and on and on and on with a Fibonacci time zone, but this is about Fibonacci time zone and the wave principle. Let's go back again to the, okay, the monthly chart. See how long we're recording this video, 30 minutes. Okay, we will wrap it up soon, all right, so it's not too long, all right. It makes sense? It is also powerful, okay? All right. If you like this video, give us the thumbs up, please, guys. All right. If you truly like it, share it. Don't be afraid to share it, okay? It's not confidential. Share it. Sometimes traders try to be secretive. Don't be secretive, okay? Just if you like something, before I don't, if I watch video on YouTube, I don't click on the like. Most of the time now, you will see on Google Plus, George, you like this video. If I like it, I like it, okay? So to create a good community, and also it allows people to know what is good quality, bad quality, and be honest, you like it, put it there, so other people, it's a reference for traders. I use Netflix, and I noticed on Netflix that those people who are rating the films are quite very good. If they rate them 5 star, usually it tends to be a good film. And the one that they mark 2 star, 3 star, usually they are not very good quality. So it's a good community, and it's good to rate things on the web and make comment, okay, all right, constructive comment, and so other people can also pay attention to it, all right. Sometimes I can go around and watch videos. Sometimes I see video, people mark it down. There's no like at all. I watch it and I notice that, in fact, the video is good. And I'll mark it up, okay? Because probably these are competitors marking their, okay, opponent down, all right? Something else we can discuss another day. So now we can use also the low of the first wave and the low of, okay, this second manual wave, and it's telling me that the possible reversal zone is quite away from this line, which means the price may continue to go up more, okay, and a reversal may happen in this zone. We will see. All right, we will see. I can do different exercise with the Fibonacci time zone. I can do it like this, using a high of the first wave and a low of the second wave. All right, this is what you see here. Now the purpose, once you do it, see whether it's giving you some information that are useful or not. Here, it's nice, it's giving me, at least I want to see one of the information that is true. Possible reversal zone, yes, it's true. All right, it's a vertical line. I was going down, and then it changed direction here. So I may pay attention to this one also. All right. This is the end of this video about how to combine Fibonacci time zones and the wave principle. In order to use the Fibonacci time zone, one should be able to determine at least the first wave, okay, at least the first wave and the second wave. All right. So following our guideline, consolidation, breakout, okay, and then a pullback. All right. If the second wave tends to retrace up to the 61.8, can even go down sometime in some situation up to 88.6%, but should not cancel the first wave. So going back again, this is going back again, how to count wave like a pro, all right? And the corrective wave, what I say to trader, concentrate on the corrective wave, master the corrective wave. Once you master the corrective wave, you'll be able to catch, okay, the third wave and the fifth wave. All right. Trader also asked me if I do any special mentoring about Elliott wave. Yes, if you agree, it's on YouTube at 24 Elliott Wave YouTube channel. That's my mentoring, and our website 24elliottwave.com. Our Facebook page, stochasticmad.com, Facebook page, Pinterest Facebook page, stochasticmad again. And that's why we talk all the time, all right? All right? So I don't, all right? I don't, the Elliott wave is a free subject. I don't charge anybody for it. It's free, all right? It makes sense? So we want to have at least count the first wave and the second wave, and then apply the strategy I told you. Applying the Fibonacci time zone to the low of the first wave and the high of the first wave, or the low of the first wave and the low of the second wave. I prefer that strategy. There are different ways that they can use Fibonacci time zone. One can combine two high, two lows, or one high and one low. We can apply the Fibonacci time zone to the multi-wave, which is formed of the first wave, second wave, third wave, and the fourth wave and the fifth wave. But if we see a complex wave, like we see an extended first wave, an extended third wave, an extended fifth wave, we can apply the same strategy of a Fibonacci time zone to determine a possible reversal zone. One thing that you should not forget is that the Fibonacci time zone are highlighting possible reversal zone. These are not guaranteed reversal zone, as you see here. Okay, there is no reversal sometime. And if we are using Fibonacci time zone, we are using a technical trading tool. But we must combine a technical trading with the fundamental. That's my recommendation to traders. And because the market is full of hedge funds, the banks, and they are using the fundamentals and the technical. That's the best approach, okay, to make excellent decisions. I hope you have learned something for this video also, okay, and we put it into use, okay, to make excellent day trading, swing trading, and investment decisions. If you like this video, give us the thumbs up. If you dislike it, give us the thumbs down. Have any comment, put it below. If you truly like it, share it on the web. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders talking about how to combine a Fibonacci time zone and a wave principle. Speak to you soon.